Hello, traders. Gary Wagner with the gold forecast here. It is about 11 a.m. in Honolulu, Hawaii, January 13th. It is Thursday, and this is the daily report. Gold under substantial pressure today, currently trading off about $14. The big news is it is actually off almost $29, $30 with a weakening U.S. dollar giving it a positive $14, $15 and about negative 30 on the sell side. We are currently at 1373, 1374. Traders, we are currently looking at a 5-minute candlestick chart. This will give you an idea of the kind of activity that we had. Of course, we have seen the market drop fairly consistently and steadily as the market reacted to a statement after hours by our Fed Chairman Bernanke. Apparently, this afternoon, we had some bearish remarks from the Federal Reserve Chairman himself. Bernanke told a panel, and I'm quoting from Kitco, Thursday afternoon, that he's optimistic and expects the U.S. economy to grow at a healthy pace of between 3 and 4% this year. He also said the key U.S. job situation is improving. This only added to traders' perceptions this week that investor risk appetite is on the upswing as U.S. stock indexes this week hit multi-years high. Of course, that is a negative factor for gold. My long-term view does not change, though. When we consider the fact that we've got $14 trillion in debt, that QE2 is printing more money, we still have scenarios that have not been resolved in Europe. And most importantly, I read an article this morning that talks about the fact that the S&P and Moody's are thinking about the possibility that the AAA rating that the U.S. government has might in fact not always be there and might be dropped if we continue to put more debt on or don't relinquish that debt itself. So that I think that this is basically a knee-jerk reaction. Now, when we take a look at the chart, you can see that we've got a nice bottom that formed. We did have some safe haven or buying opportunities that came in right around 1370. The other way that I want to look at this, and of course this is very, very short term, but if we turn this into our Ashi chart, which is a Japanese average chart, what we will find is that that also gives us a solid indication, as you can see, that we have in fact begun to move back off of this. You can see the market coming down this cascade, let's say, of these red Ashi candles, and now we have tentatively formed our bottom right in here, and we can see that the market in fact is beginning to move back up. We are looking at a daily candlestick chart. This is of COMEX gold. As you can see, closing 1376.70 is the current print of where it's at. The one caveat that I do have, and that we do have to pay very, very close attention to, I believe, is this 23% level. That's 1367. To me, it's an absolute critical area. We haven't breached it as of yet. But for my belief that this C wave right here, this corrective wave, has actually ended and we are not witnessing what I'll call a 3 count, meaning that this would all be C like that. If in fact we see it breach this one area right in here, this 23% level, I believe that we might still be experiencing our correction, and our correction is going to be ongoing. If in fact it can hold this area and we get the market taking off, meaning coming up, coming down a little bit and moving back up, I think that we'll be back on what we call an impulse phase and out of the correction. I do have to say, we are at a critical area right now, and of course it is very important on a technical standpoint that the market, in my opinion, hold this one area. And as I said, that's sitting around 1367. We have certainly not breached those lows. We have had buying coming into the market as soon as it hit right around, I'll call it 1370. Maintain our long position. I will tell you this, if I do see the market through the day break through there, I might in fact take the stop to the market, take a small loss. Of course, we're in at 1375. Our stop's currently at 1348. Right now, my belief is that our best action is no action. In other words, maintain the position that we have. That might change. We'll have to see through the trading day. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.
When I look out my window,